Hey everybody, Kurt Henry here, mortgage broker at the Mortgage Center. We are your go-to mortgage broker in the Durham region, and this is a weekly mortgage market update just to let you know what's going on in the mortgage market. So we know the Bank of Canada, of course, increased the rates yet again this past week by another 0.25%. So that increases the variable rate mortgages by 0.25% as well as line of credit rates. Fixed rates, since the announcement, have not actually increased any further. In fact, some of the bond yields have come down just in a couple of days after the announcement. So we'll keep our eye on that as far as what it does to fixed rates. For those of you that think that this is a never-ending rate hike cycle without any light at the end of the tunnel, I'm happy to say that there is light at the end of the tunnel, and the Bank of Canada actually themselves have said and do say that it generally takes about 18 to 24 months for the economy to react to policy announcements such as the rate hike cycle. The good news is that we're about 16 months into this rate hike cycle. Since it started in March of 2022. So 16 months into an 18 to 24 month time frame that's required for an economy to react to increases, we're pretty close to that 18-month mark, and so what they say is for the economy to fully react, things will start happening. So for instance, people's discretionary income will dry up. Their discretionary savings will dry up. People's access to credit will dry up, and then people's spending will start to decrease, and then things like disinflation start to happen. So those all sound like bad things, but the reality is that as those things happen, it will start to create that light at the end of the tunnel. And if the time frame is 18 to 24 months for the full impact of the economy to be had on this rate hike cycle, we are pretty close to that. So now the Bank of Canada would say that they see inflation at 3% now into 2024 and only 2% in 2025. Now 2% is their target that they want to get to. That's not as good of a projection as what they had previously said. Previously they were saying that they thought that inflation would come down to 2% sooner than that. Of course, we want it to come down sooner so that rates can start going down versus going up all the time. Now, when the Bank of Canada says that rates will be 3% next year and 2% in 2025, we have to keep in mind that the Bank of Canada themselves, they have a bias. And their bias is that they don't want people to think that inflation is going to come down quickly. Even if they think it's going to, they don't want people to think that, because if they know if people think that, then people might start spending money again. So when they say that inflation won't go down to 2% until 2025, we have to keep in mind that they have a bias when they make that projection. And that bias is that they want to keep people's spending habits very low, and therefore that can come into projections that they put out there. So anyway, just some different thoughts there on the Bank of Canada increase and where we're at in this rate hike cycle. If you have any questions on your mortgage renewal, purchasing a house, or any kind of idea, if you're in a variable rate and you're wondering about locking into a fixed rate, or if you have a line of credit that's at now 7.6% to 8.2%, and you're thinking about maybe trying to get that into a mortgage rate instead that might be closer to 5 or 6%, those are all conversations that we can certainly have. So feel free to reach out, and we're happy to help.